All right, welcome to today's session. Have the pleasure of interviewing Josh Carter, who's the marketing manager over at Koalafi. Josh, thanks for jumping on here. Thanks
Yeah,
for doing that. Tell us a little bit about yourself. Tell us a little about your background, and then a little bit about Koalafi.
sure. Yeah. Hey, everybody. Thanks for hopping on. Sean, thanks for having me, man. This is awesome. Good to work with you again. My name's Josh. I do marketing for a finance company called Koalafi. We do financing for home improvement jobs, as well as furniture, mattress, appliances. We got our start in the furniture, mattress, appliance space, as well as like tire financing. And a year ago, we got into home improvement. So started with HVAC. Now moving into windows, doors, roofing, siding, interior remodeling, exterior remodeling, all that good stuff. I spent the last 2 years in home improvement working at a company called Hatch, which I'm sure many of you guys are familiar with, a texting platform for home improvement businesses. So worked really closely with Sean and contract appointments because we had an integration. And so it's great to be connected again, Sean, and talk to contractors. This is good stuff. And it's fun now being on the financing side because when I was working more on the sales and marketing side at Hatch, like helping people optimize their lead flows, their conversations with homeowners, financing was like a big component to helping people get appointments and helping people close jobs. So it's been fun now, helping contractors sell more using financing. So Sean, thanks for having me, man.
Yeah, awesome. So yeah, we're going to tackle today's kind of webinar is all about why offer zero down, no payment, no interest, type of program. So promotional financing offer. So why do you do that? What's the benefit to you as a contractor? And yeah, without further ado, let's dive in to some of these questions here for you, Josh. Let's start off just why do big companies sell these zero down, no payment, no interest? And I think you could speak into this not only from why should contractors do it, but why do these furniture companies will use that as promotional as well? So why even do that is the first question.
Yeah, so I think for starters, like it's super easy to get leads through the door when you can advertise that on the front end. So what I found super effective is whether you're putting out billboards or you're putting out ads on TV, radio ads on Facebook, wherever you're trying to do your outreach, being able to advertise that zero down, 0% interest financing is gonna allow homeowners that originally might have been trying to save cash for a project to realize now, oh shoot, I can pay this over time. What's interesting about financing in home improvement is it's compared to the auto industry, right? Like you go into an auto dealership, you're spending $30K on a car. Financing is just like top of mind for you. Like that's one of the first things that the sales rep will present when you buy a car. It's like, oh, how much monthly payment can you afford, right? In the home improvement space, that type of conversation has not evolved at the rate that it did with the auto industry. And so what's interesting is you're seeing more and more companies. The bigger ones have typically been the first ones to adopt this type of thing. And now I'm seeing more and more smaller contractors start to adopt the zero down, 0% interest financing, because it's really allowing people that don't have the budget to spend on, $20,000, roofing job to now be able to say, hey, actually, instead of us trying to budget for the next year and get this done, I can now make, monthly payments over time. And it allows your reps to just have so much more leverage in the home when you're selling, because you can present it as affordable monthly payment options. So definitely a really good lever to pull. I always encourage contractors to introduce that concept early and often. A lot of contractors will wait until they're actually in the home to share their financing options. It's important to introduce that early and often. Like I said, you have your ads, you got your billboards, all that good stuff. But also add it to your call center talk track. Make sure that your call center reps or your receptionists, whoever's handling the phones, make sure that the customer is aware when they're booking an appointment that they can finance their next project. So I encourage you, if you don't have financing today, find a company to do that. Koalafi can help you with that. But yeah, definitely introduce that early and often because it's a really, really killer sales and marketing lever.
Yeah, well, I think the interesting thing about the no payments, no interest is that it, it's clarity to this idea that we can just put financing. We offer financing. Well, it's like, well,
Yeah.
what kind of financing? If that roof is $10,000, am I really going to spend $30,000 from that financing?
Yeah.
Or like, should I just, sure, you offer financing, or should I just go get it myself? Well, just like banks will say, hey, this is our rate. This is whatever it is. You're just bringing clarity to what that financing offer is that you even provide as well. There's just, if you want to go, just like if you're in the market for a new roof, no different if you're in the market for a new couch and you see
Yep.
an ad for a furniture and you go, no payments, no interest on it's like, well, we were going to buy that new couch anyway. Why don't I just sit on that couch right now and pay for it later?
Yep.
You just get people to act sooner. So you take somebody in an awareness buying cycle that they're just interested, and then you're able to speed up their timeline of purchase as well, which not every other contractor can do, as we'll kind of go in here. So these promos often come with bigger dealer fees here too, that would require you to increase the size or the dollar amount of the project, even
Yep.
factor that in to maintain your your net profit margins. So why would you still offer them, is the
Yeah.
question.
Yeah. So I want to take a step back and talk about dealer fees as a whole. So for those of you guys who aren't familiar with the concept of this, that's the fee that you pay a financing company in order to offer specific types of lending options, right? So for 0%, let's just say, for example, like 0% for 24 months, that financing type plan might cost you, I don't know, 8% of the financed amount that you have to pay the financing company, because they're of course providing that 0% interest. They're not really collecting on the payments there, so they got to get paid somehow, right? So it's important to understand that, like, that's how the financing companies will make money, outside of just like making money off the interest. So one thing to consider is that, and I've spoken with a bunch of contractors in the last couple of weeks about this, like, how do you actually like bake that into your quote, and like how do you make sure that you're not giving up a ton of margin in order to provide this type of financing products? Because sometimes these dealer fees can be upwards of like 10, sometimes even 15% of the financed amount, if maybe you're doing 0% interest for like 84 months, for example. Like that will lend itself to a really high dealer fee. So it's important that you bake that into the ticket, and be incredibly transparent with homeowners. And when I was at Hatch, like this was like huge for us when we were, working on engaging leads over texting. Like, leads want to be treated. They do not want to be. They want to be, obviously they're getting sold to by you, but they don't want to be. There has to be more transparency in this whole sales process here. We talk about this with providing, maybe when you're providing a quote, like being super upfront about like each individual line item and like why, each of these things cost a certain amount. The same way with financing, like be transparent with the homeowner. Say, hey, like, yeah, and this is all baked into our to the quote here. We offer financing, and part of that is we do have to pay a fee in order to provide you with this loan. And if you're upfront with the homeowner, chances are they're gonna see that empathy, because they're gonna be like, oh, okay, I understand why I'm getting this benefit, and as a result, I'm having to fork out a little bit of extra cash, but in exchange, you're gonna have to they're gonna be able to have the opportunity to pay that over time. So either way, it's a win-win. Just make sure that you're transparent with how you bake that in. The other component is do your own math. See how much on average that you're paying for dealer fees, and bake that in. A lot of times contractors might think and say, oh, I'll just increase the quote 5-10%, for a finance job, for example. But do your own math, see how much you're paying for dealer fees, and bake that into the quote. Because again, some promotional products will have higher dealer fees than others, and some finance plans don't have any dealer fees at all.
Yeah.
So it's important to kind of see how much you're spending right now on it and bake that in.
Yeah, well, to be honest, Josh, I think that's the first time I've ever even I love the concept of where I think home improvement is eventually going to get is this full transparency in estimating, right? You're
Yeah.
going to line item even the product, the material, because you can really go buy the same roofing material at Home Depot.
Yeah.
And then my labor cost is X number of dollars a square. So that's even line item instead of even that being on one line item, and the windows and all that stuff too. I think that level of transparency is the future of home improvement. I don't think we're there yet. But I haven't heard that idea of even saying, well, if you want that 24-month, deal, it's 8% more on your contract versus if you just want to pay cash or you want to do a no interest, no payment, with an interest starting off right now, there's
Yeah.
nothing. So you have that level of transparency there.
Some
Um,
people may hate me for like people will disagree with me on that, and I get that. But but but
no,
but as a consumer, and just put yourself in their shoes. Like when you contractors watching this right now, like when you go out and buy a car, like you want to know every single nickel and dime that they're charging you on that line item. Think about your customers. That's exactly how they're thinking too.
Yep.
And the more transparent you are with your pricing, you're going to be just like. So you're going to create that just like positive experience with the homeowner up front. Like that's the huge thing is like this is happening before the work is even completed. If you can start off transparent on the right foot in the home before the job, before they even sign the paper, like, oh my gosh, like when you go into the process of actually doing the install and then asking for the review, they're going to be like, oh my gosh, like Joe's Window Company was the most transparent about their prices.
Yep.
Like we knew what we were getting into going into the quote. It's just incredible. So I highly recommend you lean on the side of transparency.
Yeah.
And yeah, for the dealer fees, yeah, I mean, be transparent. Be like, yeah, like we can provide you with this, but it will be at the cost of 5% markup or something like that.
Yep. I think it's funny because most of all those markups and all that stuff are typically just you bake them in on your end of things and you kind of like give them the price, and then you have to justify the price. But I think that's why I think the way of transparency is the future is that I think I think most people have enough reason behind them of going like, well, your installation is more expensive than the last company. Well, I probably want to spend more on installation because I want it done correctly. So they're willing to pay extra for the installation versus like, well, you're charging me twice as much as I would buy the shingles for at Home Depot. And it's the same thing with financing as if you're saying like, well, I can offer you this and be more transparent. I like that. I was not expecting you to go that direction, but most companies, what they do is they bake it into their overall fees. They go, I'm expecting 10%, to be spent in dealer fees to even get this person financed. And then you'll see some companies' contracts as they go, well, we have a 10% off if you pay cash. And it's, it's kind of like, well, that was baked in there because of the expected dealer fee cost. So let's dive into like just differentiations. We kind of touched on this a little bit in the first question is just like, how do you differentiate from all the other companies offering the same things? And then, as we said, is most home improvement has been slow to adopt financing as a whole, but more and more companies in the replacement contracting industry offer financing. So now it's kind of like, how do you use financing to still differentiate yourself when everyone else is still saying, I offer financing?
Right.
And how can you use the no payments, no interest, promotional financing to kind of help push that?
Yeah, so this kind of goes back to the transparency conversation. We got some contractors that are doing this brilliantly. They will advertise. They'll take the average selling price of, say, like roof replacement, right? And they'll advertise payments starting at $499 a month for 24 months, right? It's a ballpark figure. That is an incredible way to differentiate yourself because you one, provide transparency up front about your pricing, and two, introduce the concept of making these payments over time. So instead of saying, oh, we offer financing or we offer 0% no interest financing for 24 months or 48 months or 68 months, whatever the time period is, right? If you can present your price of like in your ads or on your website with kind of like that ballpark range, like, hey, siding starting at $320 a month. That puts up front the idea in the homeowner's head before they even book an appointment with you. Oh, okay. I'm clear now of how much this is going to cost. And you can even
Yep.
get fancy. You could even get as fancy as creating like a little calculator. I think there's a couple companies out there that do this where you put in your square footage or you put in your roof. Maybe you plot out your roof and you could see, kind of come up with like an estimate
Yep.
of how much it's going to cost. But then when you provide that estimate, like provide it in terms of like that monthly payment, and you'll differentiate yourself. Very few contractors are doing this, but the ones that are getting so many more appointments. Because imagine if you type in, like if I was to go on Google right now and type in, I'm in Richmond, Virginia. If I typed in like siding replacement, Richmond, Virginia, it's going to present, maybe there'll be an ad that says we offer financing or book an appointment today. But imagine if the headline of that ad says siding starting at $299 a month. Okay, that's interesting to
Yep.
me. I've got trust in this company that they're going to be transparent up front about pricing. And when I go to book the appointment, I can expect to have a financing conversation. It goes back to the concept of offering financing early and often. Offer it in your ads, offer it in your call center talk track, offer it during the appointment, offer it when you guys are doing rehash, make sure people know, all that good stuff. You can differentiate yourself.
Yeah, and I think one of the interesting things that we've seen often is, depending on your market, one of the things that sales reps hate the most is getting to the actual sales presentation, presenting the price, getting a contract signed, to only find out that their sale and their commission is lost because of credit decline, right?
I know.
So when you can present financing early in that process, we have some companies who are asking and doing credit qualification on the front end before they even get to the price. Well, of course, we're going to give you a written price on how that's going to cost, and I can give you a range of your monthly payments and what that would look like. But let's save your sales reps time and your time to make sure you're even qualified for credit and financing options right away in doing that. So there's a way to do that without even sending it over to a sales rep as well. So I think there's benefits. And I think in an advertisement like that, if you're offering, $199 a month, monthly payments for the next, 60 months or whatever it is, it does give people a ballpark range, but it also weeds out some homeowners who, are just curious
Yep.
and that wouldn't, that can't afford that either. So
Yep.
there's a point of kind of getting people in market to go and say, well, they've already said $199 a month is doable for them. So no, that's fantastic. So what can you do with credit declines? I've asked every financing company this so far. Is like, there is a different markets have a high credit decline, whether you do promotional financing or whether you just do no promotional financing.
Yeah.
Getting people approved for financing, obviously most financing companies want a 600 plus credit,
Yep.
all that kind of stuff. And in certain parts of the country, that's hard to come by. That's hard to get people's, especially when you go outside of metro and they don't have as good of solid income on a or high enough income. How can you help them beyond if they are a credit decline, or can you help them, or how can you help? That's often I see in this industry is that a credit decline, they're dead to me and they leave them in the dust and they go searching for the new customer. Any ideas of how you can actually try to save and nurture that customer who was a credit decline, who said yes to you, and now you can try to win them back in a rehash process? Normally, traditionally, that is not a rehashed customer.
No, that's not traditionally how people have looked at it. The good news is that let me take a step back. So I bet a lot of people on the line right now are offering financing today. That's great. Chances are the provider that you're using is what we call a prime provider. Those are people that really only work with people with FICO scores over 600. So you go in, you can provide them with like an awesome, like 0%, 24-month, if they qualify for it, if they're over 600 FICO. But what about everybody else, right? They're going to get a hard decline. It's going to be super awkward. You're going to be in the home. You're going to see that decline screen. It's going to be very, very, very uncomfortable. What you guys need is you need a financing company that can provide you with maybe near prime or more subprime type lending. And there's a lot of companies out there that can help you with that. Koalafi is one of them. We've got something called a full spectrum product where we cover the full spectrum of the full credit spectrum. So you get more approvals in half the time. So instead of running, two applications to try to get somebody approved, you can run just one. But regardless of who you use, it's important that you do have that provider that can provide financing. Of course, the interest rate is going to be higher naturally, but at the end of the day, you're going to be able to allow that person to pay over time. So that's kind of step one, is like make sure you're working with a partner that can provide lending below that like 550 FICO threshold. That's super important. The other important piece is that, yeah, in the event that you do get a decline, let's just say, for example, you've tried all your options in-house options that you have, you get a decline, there's nothing you can do about it. There are a lot of personal lending options that a customer can apply for, that they may be able to get financing for your projects. You know, they could go on like a lendingtree.com and get a personal loan for a home improvement project. And chances are that you know, whoever they go through would likely have that kind of subprime type lending. So that's one thing that you guys can do, is encourage people to apply for one of those type of loans. But treat them like human beings, because at the end of the day, they could be potential customers for you in the near future. So that's kind of like the two pieces here. Make sure you're working with a financing company that can provide lending for people that are a little bit lower in the credit spectrum. Number two, if all else fails, like encourage them to go to a more personal lending option. That's very much a possibility. And then, three is like how you're following up with these leads. Naturally, it's like the typical rehash scenario where you have a CRM filled with leads that did not, sell on the initial appointment. So they kind of just sit there to die. What I like to call it, I call it like rehash. I call it like rehash, reasons for rehash, essentially. So like you have like they're in rehash stage. You got to rehash them. Why do we need to rehash them? Maybe it's price objection. Maybe it's not the right product. Maybe it's, got declined for financing. It's important that you set a cadence to keep reaching out to that lead. And so, for example, like if they were going to go try to get a loan on their own, make sure you follow up with them, set reminders in your CRM, set reminders in your calendar, continue to follow up with them, because at the end of the day, no matter how they finance the project, you're going to get paid either way, right? So treat them just like the same customer as you're treating somebody that might have a 800 credit score, for example.
Yep. Well, I think that the interesting thing is that's where we often see companies falling short, is they go for the easy sale, which is a yes, approved credit. They can move on from that side of things. But what we're seeing with other companies who are in the space, especially companies who have a high credit decline rate. You think about, if you're walking away from 30% of the companies, you have a 30% credit decline rate on your windows or roofing. If you're walking away from 30% of people who say yes to you, you're missing out on a third of the business you could potentially get over the long haul. So even if it takes you have three options after somebody's credit declined. One, I'm going to help and send them over local programs, because every state and even federally, there are actually benefits to roofing, energy efficient products, solar, that will actually help finance some of those projects that aren't based on income, or are based on their income. So if they have less than $40,000 a year or less than $80,000 a year, depending on their household size, they can get approved for a loan through the state, that's a backed insurer for some of these loans, as well as like HVAC and roofing and windows. Their energy efficiency. There's certain programs locally in your states that offer that as well. Does it take more time? Does it take more paperwork? Is it more work to go through there? Absolutely. But if it's 30% of your business to be able to do that, instead of spending 10% dealer fee, you're going to spend 10% of your time, because those don't have dealer fees as well. So you'll spend 10% of your time trying to win them over, as well as kind of the third way to go about it is to help them rebuild their credit. So I don't know if you have any ideas for kind of third kind of ways to be able to rebuild these people's credit, because often with these financing companies, when you get a rejection, it's just a hard reject.
Yep.
But like you as a salesperson, and as the company, you don't often know the why behind their full rejection. So you're kind of like, was there a bankruptcy that they didn't tell me about, or did they really owe a lot of money to Uncle Sam, and they're the red flag, and so. You can also just offer like, hey, sometimes people get declined because their credit, something happened in the past. Like, we've got ways to be able to rebuild credit. or you've got other options to co-sign. You've got other options. So
Yep.
explore all the options to help this person get their roof, get their windows, get a new bath, whatever their project is. Like, don't stop at the rejection.
Good point on the cosign, Sean. Yeah, there's definitely instances where you might have two decision makers in the home, and we'll run, there'll be one application that gets run and that person may not get approved, but you
Yep.
can always try like the spouse or maybe the parent, whoever's in the home, and has that, it was on the, on the deed essentially. So that's super important. What we do at Hatch for rebuilding credit is, for certain verticals, we have a lease to own product, which is a no credit needed product. And that's applicable for verticals like HVAC and water heaters, things that are quote unquote leasable. You can't really lease a window because you can't rip it out, right? Or that would be, you could rip it out, but that's not really possible, right? So those are leasable items. So what we do is for people that are, trying to buy an HVAC unit, and have, no credit or really, really low credit, and they're building that credit, is put them into a lease to own option. As they make payments over time, we report that data back to the credit bureaus. And if you go on our Google reviews, you type in Koalafi on Google, you'll see some Google reviews that say, hey, yeah, thanks guys. Like, you helped me rebuild my credit just because I couldn't find credit anywhere else. That's why the name, I mean, not to be all pitchy right now, but like, that's why we're called Koalafi, because we help people qualify and rebuild that credit. So that's a good point, Sean. Like, it's have some empathy. You don't know why people got declined. I've seen some ridiculous scenarios as to why somebody might have gotten a decline or had a low credit score. There's cases where somebody went through a pretty nasty divorce and their credit score dropped by 200, 300 points just from that. So,
Yep.
You don't know the full story. There's always going to be situations that we need to take into account.
Yeah, absolutely. Well, yeah, I think that obviously that's especially with those customers like that. That's a large quantity of people in our database at the end of the year. For especially as you're at scale as a company, that you've got a lot of potential of people, especially with products like roofing and windows. That project needs to get done. There's a dedicated timeline. Like the house will deteriorate without new windows, and they're going to pay higher and other costs because of they don't have new windows and energy costs. And if they don't replace their roof, it's going to leak. There is defined timelines on these projects. And just like anything else, just because they're not qualified today to purchase from you, keep them in a solid rehash cycle and make sure that they're just appropriately followed up with the right messaging, that you're still there to help.
Yep.
And when someone is in need, they'll find the solution to their problem. When someone needs a new roof, if their credit's bad, they'll go find somebody to go co-sign on a loan with them. They'll go searching high and low because they need a new roof.
Yep.
They'll go searching high and low because they need new windows. Are they going to come back to you, or are they going to go to the next person with the next quote?
And Sean, that goes back to like why financing is so darn important, because you guys are offering, like, I know there's some people on here that offer roofing and siding. Like, a lot of times those can be like emergency type of repairs, and they're not expected, and oftentimes not covered under insurance. So if you can just make sure that they're super clear that you offer payments over time, starting at, I don't know, $200-300 a month, do the math, and if your average selling price and kind of back into that, then you're that customer is gonna come to you first, because they may not have the cash up front to be able to pay for that.
Yep, absolutely. Well, awesome. This is a great conversation here, Josh. I obviously we talked about kind of dealer fees and how that's all kind of baked in there, and how to get the financing stuff in front of homeowners as fast as you can. And yeah, at the end of the day, it's all about serving people and be able to meet them where they're at, give them what they're looking for. And I think financing is a way to do that. Obviously, when it comes to promotional credit, it's all about marketing, and advertising is all about trying to wave the shiniest object in front of people and a busy consumer on a daily basis. I think promotional financing is a great way to be able to do that, to get a customer in who's at, again, early stages of buying cycle all the way through. They're actively looking to purchase right now, and you're just making it more convenient for them. So that's why we even see furniture commercials and all that kind of stuff with 0 payments, no interest financing, is because it gets people in the door today and to help make action when they were going to do it tomorrow. So yeah, Josh, thank you again so much for your time today. And how can people reach you if they want to learn more about Koalafi or just to get in touch with you?
Sure. Just feel free to visit our website, koalafi.com. We don't have a koala yet. We're working on that. But koala and then FI. And then my personal email, I'm going to drop into the chat.
Awesome.
If anybody wants to reach out and has any questions, feel free to reach out. So
awesome.
Appreciate it, guys.
Yes, thank you everyone for your time here and jumping on. And yeah, well, excited for next week here. Feel free to join us next week here. I'll be sending an email, and then this recording will be sent out to you just within the next couple hours. Have a great day, everybody.